Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Triumph Financial Inc. quarterly report. Triumph Financial Inc. offers a diverse range of financial services and products. The company's business lines include banking services, deposit products, checking, savings, money market, certificates of deposit and loan products, commercial real estate, land, construction, residential real estate, commercial agriculture, consumer loans, electronic banking services, insurance brokerage services, mortgage warehouse facilities, transportation factoring services, payment services through the TriumphPay platform, and LoadPay product. These services cater to various industries, including over-the-road trucking. The significant drop of 42.38% in Triumph Financial Inc.'s TFIN stock price over the past year can be attributed to a series of unfavorable financial news and broader market shifts. Key events contributing to this decline include weak earnings reports, deteriorating financial metrics, and negative analyst sentiment. The company's first quarter 2025 earnings report missed analyst expectations, leading to a nearly 50% year-to-date stock drop. The third quarter 2025 earnings also fell short of revenue estimates, despite beating EPS expectations, further fueling concerns about profitability and operational efficiency. Additionally, the company's 5-year decline in earnings per share and unfavorable price-to-sales P/S ratio have contributed to a 61% loss in stock value since the 2021 fiscal end. The changing interest rate environment and increased unpredictability in the financial sector have also led to a shift in market expectations, with some analyses considering TFIN's stock significantly overvalued. Analyst sentiment has remained cautious throughout the year, with consensus ratings generally at hold and some quantitative analyses issuing strong sell ratings. These combined factors have led to the substantial decrease in Triumph Financial Inc.'s stock price over the past year. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by an increase in average net funds employed, resulting in higher interest income and fees. The launch of the Data Intelligence segment in Q4 2024 has also contributed to revenue growth. Additionally, subscription fees and access fees from intelligence offerings have increased, while the use of Payments Network by Factoring segment has generated payment network fees for Payments segment. On the other hand, revenue decline is primarily driven by a decrease in average invoice size and an increase in credit loss expense on factored receivables and loans. Non-interest income at Factoring segment decreased due to a drop in early termination fees and unrealized losses on revenue share assets. Net interest income declined at Payments segment. Overall, the company's revenue growth is driven by its ability to manage funds efficiently and generate higher interest income, while revenue decline is primarily attributed to increased credit loss expenses and decreased non-interest income. Net income and profit margins experienced significant fluctuations between 2024 and 2025. Initially, net income decreased by $3,639,000 over the 9 months ended September 30, 2025. However, it increased by $0.2 million, 3.1%, from 2024 to 2025. Furthermore, a notable increase was observed in Q3 2025 and YTD 2025, with net income rising by $15.2 million, or 77.3%, to $34.9 million. Profit margins also underwent changes. The net interest income margin decreased from 88.7% to 87.8%, while the non-interest income margin increased from 10.3% to 11.1%. Conversely, the net income margin declined from 14.5% to 9.2%. Additionally, the operating margin decreased from 20.99% in 2024 to 20.71% in 2025. However, a notable improvement was observed in EBITDA margin, which increased from -7.4% to 10.8%. The company is generating a significant amount of positive operating cash flow. The net cash provided by operating activities has consistently increased over the past 2 years, with a notable jump from $30,723 in 2024 to $30,583 in 2025. Furthermore, the 9 months ended September 30, 2025, saw an even higher figure of $123,219. This trend indicates that the company is efficiently managing its operations and generating substantial cash flow from its core business activities. The company's debt level and interest expenses have undergone significant changes between 2024 and 2025, while total debt has increased by 7.6%, with a notable rise in Federal Home Loan Bank advances from $30,000 to $280,000. The interest-bearing deposits with other banks have decreased substantially. Consequently, the total interest expense has increased by 9.4%, $5.1 million, but interest expenses on total interest-bearing liabilities have actually decreased by 7.1%. Overall, the company's debt level and interest expenses have become more complex, reflecting a mix of increases and decreases in various categories. The company's financial performance varied across different segments and regions in the given period. The intelligence segment stood out as a strong performer, launched in Q4 2024 with successful acquisitions. The banking segment also showed significant growth, with a 6.5% increase in banking loans. On the other hand, several segments struggled to meet expectations. The payments segment generated only 11% of total revenue, a decline from previous periods. Corporate and other incurred an operating loss of $91.2 million, a 11.6% increase from the previous year. Communications and technology saw a decrease of -19.5%, while advertising and promotion declined by -9.9%. Management's outlook and strategy. The company's management is optimistic about its future prospects, citing restructuring activities as key drivers of growth. They believe these efforts will enhance operational agility and strengthen the competitive position, ultimately leading to sustainable long-term growth. The introduction of new technologies has delivered significant efficiencies across the organization. A strategic shift towards a network-based model for the trucking industry is underway, focusing on fee revenue rather than capital-intensive products. This change is expected to drive carrier loyalty and improve payment experiences through innovations like load pay and supply chain finance. Management also emphasizes the importance of diversification in mitigating risks associated with concentration in the transportation industry. They have enhanced stress testing to address interest rate reset risk and are focusing on acquiring deposit accounts that are less sensitive to changes in interest rates. Overall, management is confident in the company's ability to continue its historical earnings trends despite uncertainties related to COVID-19 and economic conditions. TBK Bank has a history of paying dividends to its shareholders. The company's dividend policy is based on current year earnings and earnings from the previous 2 years, adjusted for dividends already paid. This suggests that TBK Bank prioritizes returning value to its investors through dividend payments. That concludes the financial summary for Triumph Financial Inc. Feel free to comment below, and I will be happy to answer them when possible.